Hey, what's up, everyone? This is a stock market recap and analysis for November the 3rd, 2018. As always, we're going to start here in our spiders. Fascinating day. Really no other way. We were up 1.32%. Let's take a look really here. As you all may have known, if you have been following some of my daily recaps, we really had quite a frustrating but interesting day if you're a bear, and I had been bearish on the market. I think lots of folks had been bearish, but when you see a 263, a 20 point, almost a 10% move in the market at 1, 2, 3, 4, 5, 6, 7 days, it's really hard to do anything with that. But I mean, we've been seeing a lot of volatility, so I don't necessarily expect that to stop. I mean, you're not necessarily seeing where we're just in this crazy uptrend that we've been for so long. Let's get into this candle today. We saw a massive gap up. When I woke up at about 6 o'clock this morning and took a look at the futures, I was shocked, right? Because we had seen really challenged on this 200 simple moving average. We were looking for this death cross, and the market just said, nah, forget that. We're going to jump from 275 to open at 280. We're going to pop 5 or 2%, $5 or 2% on this. And then we saw a ton of volatility all the way down to 277. But then we eventually saw us close close to the high of the day, up 132. I think when we see this kind of gap, it really just makes sense, that we're going to see some of it get taken back as the bears try to make a move. But when we go here to the 1 minute, 1 day, you really see by noon we had seen the low of the day. We kind of move up, we try to get challenged, really doesn't happen, and then we put in a couple of higher lows. All right, so higher low right here, higher low right here, higher low right there, higher low right there, and so if I'm playing some of these, on the daily or on the 1 minute, 1 day, if I'm playing options or whatever, I'm trying to make plays based on some of these support levels where we kept making higher lows. So anyways, really, really interesting day there. You're going to see really similar things across all of the major ETFs. You see this massive doji candle right here where we went, and this is just basic candlestick analysis, right? You really see us go down. The low of the day today was the high of the day on Friday. We saw this get challenged, and then the bulls came back with a vengeance. Nothing in regards to outrageous volume, which is super interesting. We saw this massive gap on nothing but, kind of typical volume, average volume. Now here, interestingly, we are right at this 200, and we see this death cross getting ready to happen. And so I think that there's a lot of interesting things as we continue to move in through December. Here in the diamonds, you're going to see similar here. This trend line held a little bit better than any of the other trend lines, even though really right now it's really not a trend line whatsoever. We might take a look and see if we move down a little bit to redraw this trend line. I feel good about this particular trend line. I might draw another support down here at 233.2 as kind of major support. But for right now, we'll just continue to let this trend line play a major role in kind of my analysis there on the spiders. Towards the end of last week, I kept saying that we were entering a place where we were going to have to make a decision, and it looks like that decision's been made here. We are in a bearish chart, though, right? Because we still have this 50-day simple moving average, and we still have this 200-day simple moving average. And so I think short term, we still might have a bullish market short term. We're over some key areas, and we had this 9 EMA really just get broken. But we have this these trend lines, right, or these simple moving averages right here that we have to pay attention to. Here in VXX, sorry y'all. Here in VXX, we will make this big. VXX saw us try to get down into these boxes. We are just going to take this all the way out to where we are at. We're going to hit OK. And so we're now back in the box. So what's going to happen here? Are we going to consolidate into the box, or are we going to see really us do very similar things that we did here and then see volatility come back with a vengeance? I'm not sure. In VXX, for those of you all that know a lot of my trading style, you know that even though I am bearish on the market right now, I have really appreciated seeing this move in VIX, and especially this gap down. And it wasn't too bad on the portfolio because it's just part of my long-term strategy. And if you're interested in what that strategy looks like, reach out at sellthatoption.com and Ryan at sellthatoption.com, and we can certainly talk about what some of that looks like. Let's get into our premium selling ETF chart here. See if there's anything to note. EWZ, no, we have had a couple of big days here in GDX, but as you notice, we're still relatively similar. We have a lot of volatility, but we're still pretty similar in regards to where we've been. XOP, I think it is worth bringing up oil. In my email to members today, I said, oil was up pretty big here, and I'm actually looking to initiate trades here in oil. I really like oil here. So I think that I'm hoping that we're going to see this particular thing move, this whole moving average finally make the turn. I'd been talking even publicly on these videos if I thought we were getting ready to put in a bottom, and I wonder if we have. I don't know that we have, but I certainly am wondering. I'm going to continue to be patient, continue to let the charts kind of come to me. But this type of day isn't necessarily something that was out of distinct realm of possibility as to what was going to happen. So I definitely think oil is worth talking about. You see OIH and XOP. I don't trade XLF very often, so we can go to XLE. So you can see that all of these oil derivative products were up, right? So OIH 3.54%, gap up, challenged this position, and then went all the way back up. OIH had really put some bottoming candles in. So let's see what happens here in OIH, and then we have XOP, which is looking like we're seeing the change here on the whole moving average, right? And so I am writing that down actually for an internal note that we're seeing this change here based on this color here in OIH, and so our XOP. And so what the impetus was, right? Number of countries have said they're going to limit production, and so that's going to pop oil. There's certainly a glut in the oil market right now, and so when you see those things, it's certainly tradable for us. FXI put in had a pretty nice gap up right there, 1.5%. Silver's been interesting. It's been tough for me to really get a feel for silver recently. But other than that, you're not really seeing anything out of the normal, just basic cyclical market movement here in a lot of these securities. Let's take a look at our Market Watch tab in our IV percentiles. We do see silver, UNG, RSX, USO, OAH, XOP, XLE. So of our first 7, we see 4 that have something to do with oil and gas. So that's super. Nope. If we add nat gas in, so 5 of our top 7 here in implied volatility percentiles are all at the top of our lists, and then we have a couple of, we have the UK, Mexican ETF, Euro shares, FXE, and FXE isn't one that you're going to normally see up here. So this is pretty high levels of IV for FXC get down, and you still see, you're still seeing a lot of our major market indicators still pretty high right here. Interestingly, we're already seeing the Qs give back almost $1 after hours. Finally, let's go into our futures. What is going on with our futures right now? We see that the S&P minis are down, NASDAQ's down. We also see gold and the Russell down, while we see volatility up. And so it's looking like we might gap down tomorrow. One other thing that's really interesting that I think is worth showing here as we're in after hours is the difference between the puts and the calls here. Option statistics are always worth looking at. And so as you can see here, we have almost 100,000 more puts that were sold than we do calls, and we were up almost 2%, right? So it's just interesting to kind of take a look at, and then you compare that to the SPY, and we had more calls than puts here. You go to IMW, and we have more puts by about 20,000 than we do calls, and then we go to the diamonds, and interestingly, we had really low volume here in the diamonds. Not sure what that's about. It's certainly something that I want to just kind of get a general feel for as I continue to work these markets. Okay, lengthier recap today, but it is a Monday, and so it's worth talking about some of the things that are going on. As of right now, I am signing off, and so if you have any questions, please feel free to reach out to me at Ryan, R-Y-A-N, at sellthatoption.com. I'd love to talk trading with you. As always, I'm not a financial advisor, but I love trading. I love the markets. This isn't investment advice. This is really just talking about things that we're seeing. So reach out to me if you have any questions. Otherwise, I will see you all tomorrow.